state businesses and an explanation of what's going on with Prop 40, the redistricting one. Richard Hausman.
Would require multi-state firms doing business in California to use only the single sales factor formula. Now, what's that all mean? Multi-state businesses, which operate both in California and in other states, hence multi-state, pay the majority of California's corporate income taxes. The current law allows such businesses to choose the more beneficial to them, two tax formulas. One based on the proportion of its sales in California, which is also known as the single tax. So if 25% of their sales are in California, 25% of the tax goes to California. The other is based on the proportion of its sales, payroll, and property located in California, a complex formula. The proposal is to do away with the multi-tax and limit it to the single tax. The change would not apply to agricultural, resource extraction, meaning mining, or financial firms. Prop 39 would establish a fund to support projects to improve energy efficiency and expand the use of alternative energy. The interesting thing is the amount of money, the fiscal effects on California. It's estimated that the change in corporate tax policy would generate approximately $1 billion in additional revenue annually. Now, for the first 5 years, Prop 39 would dedicate about half of that, a little more than half, for the first 5 years, and the entire $1 billion per year starting in 2018. The amounts generated would increase over time, and as a result of the new revenue, funds going through to K through 14 under Prop 98 minimum funding would increase by about $200 million annually for 5 years, and at least $500 million, $500 million each year thereafter. The supporters say that Prop 39 ensures that large corporations pay their fair share at a time when there have been drastic California budget cuts, and that Prop 39 will benefit taxpayers by funding energy-efficient projects at schools and other public buildings. The counterpoint to that is that the $1 billion tax increase will result in the loss of thousands of jobs in California, and that the energy efficiency projects are already funded at a significant level. The proponents of this group, of this proposition, are Tom Steyer, who is a hedge fund owner, has contributed $22 million to it. Californians for Clean Energy has donated another $1 million. Natural Resources Defense Council, $30,000. League of Conservation Voters, $25,000. A total of $23 million of that $22 million, roughly, by Tom Steyer. Those against it, as you might imagine, are multi-state corporations. General Motors, Kimberly-Clark, International Paper. They have not contributed much, only about $45,000. One of the contradictions pointed out by those in favor, contradictions to the opponents, say that if this goes through, there would be fewer employees and less property in California. Well, the point is, if right now they can choose to reduce their taxes by reducing the number of employees in California, that sort of blows the counter-argument completely out. As you might imagine, there is a huge number of people on both sides, organizations on both sides, but most of the money has come from Tom Steyer, the hedge fund manager, Molly Munger, who is half-sister of Charlie Munger. But those in favor of the San Jose Mercury News, the LA Times, Sacramento Bee, Contra Costa Times, League Conservation Voters, and American Lung Association, among many others. Interestingly, Chrysler said they would not oppose it, even though they are here in Multistate. Those others against it are the San Francisco Chronicle, Orange County Register, California Taxpayer Protection Committee, and the California Republican Party. Any questions? Yes, Molly. She is in favor. Yeah. You know, she's Charlie Munger's half-sister. Yeah. They certainly are. Of the table.